All right, number 5 on the list is deductions for tips and overtime, and this does not directly relate to the tax liability of the business, but it does directly relate to the tax liability of the employees, and the business owner needs to understand this for several reasons. So Phil, kick us off and explain this to us.
Yeah, thanks, Adam. Yeah, I'll go over kind of the deduction now. So this is for the employee and something that they will deduct from their personal return. So for tips, an employee can deduct up to $25,000 of their amounts receiving tips. That's either electronic or cash tips on their personal return. So essentially for most workers in the hospitality industry, that's restaurants, and it can even include barbers and salons. And it's really any business that's customarily in the tipping industry, culture. Now, so they get that $25,000 deduction. Now, when it comes to overtime, any hours worked over your standard 40-hour work week, that time and a half pay, that is up to $12,500 can be deducted for a single person, or if married found jointly, up to $25,000. So really, if you work in overtime and in a tipping job, you can really reduce a lot of your income from taxes.
Right, that's a huge deal.
Yeah, and this is ultimately going to make for happier employees, right? I mean, as business owners, we want to take care of our people, and so this is ultimately enabling us to do that, so that they have more take-home pay, and will help them want to stay with the company longer. So this is really a great win, and for our employees.
To learn more about how your business could find potential tax savings under the new tax law, click the link in the description for our free PDF, 10 Ways the New Tax Law Could Reshape Your Bottom Line.